All right, everybody, I'm going to do a quick YouTube video today on how to fill out a Schedule C. And so this schedule is if you have a side hustle, maybe you did some contract work where you're going to get a 1099. Maybe you just have a small business that you're starting up, or you own an LLC, like where you own 100% of it. So in these cases, you will have to fill out a Schedule C. Before I go any further, though, if you're getting a lot of value out of my content, there are three things I want you to do. They're simple and easy to do. Number one, like this video. Number two, subscribe to my channel. And number three, share it with your friends. So I'm going to be looking down here, and you see I have the Schedule C, which again is for people that have a business or a side hustle, or maybe they did some contract work, freelance work, stuff like that. And so I'm going to walk through how you fill these out. And we're going to start with the name of the proprietor will be your name. You're going to have like a principal, business, or profession. So like basically like what product or service are you selling? You don't have to be like super specific, but you kind of want to, it's kind of a fine line. Like, like I'm a CPA. I could say certified public accountant, or I could say accounting services, something like that. It doesn't have to be accounting services for a small business. You don't have to go into that much detail if you don't, want to. The business name. So like if you have an LLC or anything like that, this is where you would enter this information, and then your business address. Now, a lot of people get confused because they think, oh my gosh, I don't have a business location. You can put your house in there. That is your default. So just know that, like you can put your default in there. It's, as your home address. You don't even have to have a business name. You can just be you. So just remember that. Like there's a lot of stuff in here that's not necessarily required. So just remember that. Your social, if you have tax software, that will automatically populate. The code. So this code maybe we'll talk about it later in this video, but this code is a North American Industrial Classification Code. It is basically a code a 6-digit code that kind of helps standardize the industries. In other words, bakers might have a code, or accountants might have a code. And it's just, I guess to kind of help standardize like the line of business that you're in and assign it a certain code. We can kind of walk through that here in a little bit, but I just want to get through this stuff first. But yeah, we'll walk through how to look that one up. The employer ID number, if you have it, you don't have to have an FEIN. If you do need an FEIN, I think I put a video on how to get one. It takes literally about 5 minutes to do it. So if you have it, put it here. Accounting method. Now, accounting method is one that a lot of people get confused about, and I'll walk through it here. And we won't talk about other accounting methods, but I'm just going to talk about the two main ones. For most people, you're going to want cash. Why? Because it's the easiest form of accounting, and especially like if you're a side hustle, it's probably going to be the one you're going to start with. In fact, if you don't do anything, you're assumed to be default a cash method taxpayer. So what that means is if I get $100 for an order that I don't have to do until next year, that's income. If I get cash in, it's income. If I spend cash, it's an expense. It is that simple. Cash in, income; cash out, expense. It doesn't matter when that work is performed. Now, accrual, on the other hand, is a little different because I might get cash for an order that I will not do until next year, but that's not technically income because I have not performed the service yet. And so in that case, you would not record income. You would have cash, but then you also have a liability because you haven't done the work yet. So that customer could come back and say, well, I want a refund. And you have to give it to them because you haven't done the work yet. So in that case, you would not have any income. So, but for most people, it's going to be cash method. You're going to want to be cash method, at least starting out, unless you have a special circumstance where an accrual would actually benefit you. Again, you want to keep it simple starting out. You don't want to overcomplicate your accounting. And so cash is where I would start. Did you materially participate in the business? Most people are going to say yes. If you started or acquired it, make sure you just check this box if it's a new business. These 1099s, these questions are important. And they're important because it is the way that they're checking to make sure, did you comply with the rules on 1099s? Now, what does that mean? If you had somebody that did work for you as a contractor and you paid them with a check or cash, you need to report that expense. And also, if it was over $600, you have to send them a 1099. This would be the same with any other things that would require you to send a 1099. Like if you had rents, rental income that you paid out to somebody, but most likely it's going to be contractors like that you've hired to do certain projects for you. So just know that if you have anybody that you've paid over $600 to, and you paid them with a credit card, or I'm sorry, you did not pay them with a credit card or a payment processor, like you paid them with a check or cash, you will need to issue them a 1099. So just be aware of that. And so that's all that is checking off. Now, I hesitated on the credit card and the payment processor because if you pay them that way, you don't have to send them a 1099. You might be asking, well, why? Well, it's because with those, like a credit card, they would get if there was enough income from a credit card, they will get a 1099K, and that would come from the credit card payment processor. So that would not, if you send them a 1099 and then they also got one from them, that's doubling up on income. So you don't want to do that. So these are key. You want to make sure that these are filled out. And one thing you want to be careful of is, like, when you're doing your books, and we'll kind of walk through it down here, is, if I show $10,000 of contract labor, that could trigger an audit. Because why? Because you're showing a lot of expense and you didn't fill out a 1099. Again, it's just one of those ways, like if I have a 1099 that I send out to somebody for $10,000 saying I paid them that, and I show $10,000 on my return, that reconciles out. So just be aware of that. So when I fill these out, like your income, you want to make sure that your sales tie. In this number, like if you're filing sales tax returns or gross receipts tax returns or business tax returns, anything like where you're filing with your state, you want to make sure that you can reconcile the number in here to the number that is on those returns. So in other words, if I have a sales tax, if I file a sales tax return every month, let's say, the returns that I file from January through December, let's say I make $100 a month every month. Well, that's a total of $1,200 of sales. I better see $1,200 of sales in line one. If I don't, you need to know the difference. This is important because the state does get copies of your income tax return, and they could cross-reference that and do a quick check on their computers and say, hey, this is not adding up. Let's audit or issue them a letter saying, hey, explain this difference. So always reconcile that. Returns or allowances, I typically don't use a whole lot, but obviously if you want to report that separately, you can. Cost of goods sold. So these would be things like if you're making a widget, it's all the materials, all the supplies, everything that is going into that is directly related to making that. So think about a cookie. What goes into a cookie, for example? Ingredients, the flour, the sugar. You could even put food coloring in there if you want, like sugar, water. Not water's, but water's practically free. I don't know why I said that one. Any of the ingredients, all of that stuff that goes into making that would go into that. Like if you're flipping houses, that cost of goods sold would be your housing inventory. So when you sell a house, the cost of that house would come off, cost of goods sold. And that's if you're a house flipper, not renting them out. So this is like where these numbers will come in. And if you look down here, and we'll scroll down, so line 4, we'll go all the way down to line 42, you can list out here like this whole like cost of goods calculation. I'm not going to go through every little explanation here unless you guys have questions in the comments, and obviously we could revisit that with a future video. But ideally, like, you have your inventory at the beginning of the year, your total amount of things that you've bought, labor, materials, all this, and at the end of the day, you get your cost of goods sold, and you're walking through basically here's my inventory at the beginning of the year, here's what it was at the end of the year, here's what I spent total on all of my stuff in my inventory, and here's what I used up. and then you get that the difference backs out. So it's important to, especially if you're making products, to make sure that in your accounting records that you are tracking that somehow, that you have like categories that are specific to the cost of making the product, have those categorized as cost of goods sold to save you some time. So then we go to expenses, and all these expenses here are just general categories. When you're doing your books, here's a tip: when you do your books, make sure that you try to use as many of these categories as you can to match up to your return. It'll make your life a lot easier. There may be other ones, that other expenses, like, when we'll talk about that here in a second. Other expenses can be, other categories that don't necessarily fit any of these. But what you want to try to do is use as many of these like pre-made, pre-filled categories as you can. It'll save you time. So I recommend, if you're setting up your QuickBooks, or maybe you're using a spreadsheet, try to use these categories and as many as you can. Now, what you will have are other expenses that, and I'll show you down here. You go down here to these other expenses. You can list out as many as you want. And my guideline is, you want to be specific, but you don't have to put like, I spent $3 on paper towels or whatever. You don't have to get that specific. For those little teeny tiny items, you can put miscellaneous expenses, and that's fine. What you don't want to do is, let's say you have $200,000 of sales, and you're listing it, and maybe $100,000 of expenses, and then you have $10,000 of that is in miscellaneous. That's a big percentage as compared to your total, and that probably could, raise some red flags. So you want to keep that number small, But obviously, if there's like little like one-offs here and there, put those in, and you can make a miscellaneous expense account. But try to break them out as reasonably as you can. Let's go back here to the other line item that is important, are car and truck expenses. Now, what I recommend with this is that you use a mileage app like Mile IQ to track your mileage, but this is where it will matter, is in that section there. And when you look down here, it'll ask you like some questions about your vehicle and stuff. And these are the keys that you want to make sure that you have them filled out. Your Mile IQ app will help you fill these out and also help substantiate the documentation, because it does ask you, hey, do you have evidence to support your deduction? So like with a vehicle, you want to make sure that you have a log that says, okay, what was the business purpose of the trip, the time of day, where you went, where you came from. Having all of that, in the mileage, obviously, having all of that will go a long way to substantiating the deduction that you need to support the number that you're putting on this return. So a key point there, you do not want to forget. Now, when you go through all of these fun things, you'll get to down here for expenses for the business use of your home. This is if you are doing the home office deduction. I'm not going to cover that form in detail, but if you are taking the home office deduction, it would show up here, or you could use the simplified method, which is $5 a square foot up to 300 square feet. You can do it that way and take that there. And then you have the net profit or loss. That net profit or loss is what is used to do a couple things. Number one, that flows to your income tax return. That is what you're going to pay income tax on. Number two, it's also going to be what you pay on self-employment tax. So that number will be used as the basis of figuring out how much you will need to pay in Social Security tax and Medicare tax as well. So just know that this is what is being computed here. And to get back to, I think I covered everything, major points here, but let's go and look at this NAICS code. So if we go to the NAICS code, you can go in here, and what you have are the different categories. And these are the codes I was talking to you about right at the beginning of my presentation. And like, for example, if you're a real estate rental, you click here, for example, And you could do keywords and stuff like that. So you could say, hey, do you lease, are you a lessor of a residential building and dwelling? If you're that, like if you're doing residential rentals, this would be here. If you do other real estate property, you can see here, like, are you a real estate agent? Stuff like that. And you can just, you find the category that's closest to what you're actually doing. Maybe you're like me and you are a certified public. If I can do it right. So you see, there's a code here. So that's what goes into that form. And so like literally you can just Google NAICS, and I think that's where it takes me, like NAICS.com, and you can do a code search that way. So just you try to get the one that most accurately fits the line of business that you're in. Now, what do I think the IRS does with them? I do think that they have groupings of like average salary data and all of that. And I think they probably use that to help, probably with audits, I would guess, to help build that database of, okay, the average certified public accountant with this code makes this much money. It can do stuff like that. And so that's why they use it. So you just want to make sure that you get a good code in there. So I'm going to leave it at that. And if you have any questions, you be sure to drop them in the comments. I'm happy to answer them. We can talk a little bit more about the home office deduction in a separate video. I think that's probably going to be best, just because I think there's a little bit more detail that needs to be discussed. And so I just wanted to keep the focus really here on Schedule Cs and that portion of it. But again, you got any questions, drop them in the comments. You can always send me a DM. You can follow me on Instagram at mdeepcp.